Hey folks, before the market even opens today, there's going to be two major stories you need to be aware of. First, the Supreme Court. They're expected to rule on tariffs, possibly as soon as Friday. That decision could have real consequences for inflation and ultimately interest rates. Secondly, ADP payroll numbers. You know how I feel about those, but those just came out this morning in headlines. Well, they're surprising when it came to the jobs market. So when you put these two things together, policy risk, labor market data, they tell us a lot about where the Federal Reserve stands and what could happen to interest rates next. So if you're watching this video, most likely you're a homeowner. You might be a home buyer. You might even be a realtor or loan officer trying to figure out what the heck's going to go on with those and the whys behind it. Well, today we got a juicy stories for you. We got the Supreme Court coming in on Friday. Are they going to give us a decision? I don't know, but we're going to talk about tariffs and what the Supreme Court's ruling could do to interest rates. But the first thing is, let's go over to ADP payroll numbers. Now, I know you know how I feel about these things. So if you go to the ADP payroll numbers, here's what they came in today. You go to the economic calendar, the last reading was a negative 30,000. They expected to go up to close to 50,000. It came in about 41,000. That's not all the good news. If you really dive into it, what we also got today is right through here, how much wage growth was. So if you really dig into that data, that number was surprising as well. So let's get over to it right through here. ADP payroll numbers came in, 41,000 new jobs were created. That gives us stability. But over here, if you stayed on the same job, you're most likely got a 4.4% raise over the last year. Now, don't blame me, and if you said you didn't get a raise, that's not on me. This is just data that we're going to go over. But if you change jobs changers had a wage increase of 6.6%. So even if you think inflation's running at 3%, you're still gaining more than what inflation's at. So now the next piece of the puzzle is those tariffs. Those tariffs, I'm like, what's going to happen if they're deemed illegal? And I'm getting a lot of questions for that right now. So let's get over to this because there's only two scenarios. They're going to either say, yeah, you can do it, or no, you can't. Well, the surprising thing is if they say no, you can't, that might be more detrimental than them coming in and saying, you can at least put some guardrails on this and we'll accept it from there. Here, let me explain what I'm thinking. So if you go down through here, here's the probable outcomes that's going to take place. You have court upholds broad executive tariff authority, and this is the risk to the market because they're saying, okay, now what could President Trump do in regards to tariffs? Could he increase them? Can he start implementing them in more places? So that's actually bearish for the bond market. You see right down through here. That could present higher yields. Now, if the Supreme Court comes in and says, okay, we're going to put some guardrails up. We're going to say, okay, you can do that. You can't exceed this and so forth. The markets are going to say, okay, I think we might have dodged a bullet because on this one, that's going to be bullish for the bond market, and that's going to mean maybe yields can come down just a little bit more from where they are. So could this be the catalyst that we need to break into the 5% range when it comes to mortgage rates? Well, let me give you my thoughts on this, folks. So if you go over to here, here's what my thoughts are for these. And I'm going to give you my, should you lock or should you float or what should you do? But when you're coming to these things, what you really have to focus in on is the daily news that we get. So let's get over to the economic calendar. We went over the ADP payroll numbers today, the JOLT numbers coming out later today, and then we're going to get the true unemployment rate later this week. But let's get over to see how the markets are reacting to this. And what the markets react to is basically the same thing the Federal Reserve reacts to. So the Federal Reserve, they're looking at inflation. Right now, yeah, inflation's a little bit high, but it's not running off a cliff. But that's also what the tariffs are going to give us some guidance on. Are these things, could this go up dramatically from here, or should there be some stability when it comes to inflation? Now, the jobs numbers. We're going to get the official jobs numbers report on Friday, but based on ADP payroll numbers, and I know, and all the other data we have, how the jobs market isn't falling off a cliff, and that was the biggest worry for the markets, especially the Federal Reserve. So the Federal Reserve sees the unemployment rate basically sticking where it is or maybe ticking up 1 or 2 ticks. They're going to say, okay, maybe we don't have to cut rates. Maybe we don't have to cut rates. So that's where the markets are jittery right now. But based on the news we got so far today, it's pretty good. So how we follow rates is right through here. So if you're new to my channel, what we follow is right up through there. It's the MBS. It's a mortgage bond that trades on Wall Street. This makes up the biggest part of your mortgage rate. So as this price goes up, mortgage rates come down. So we love when the price goes up. That's how it works. So the bigger the number up there, well, the bigger the rate adjustment. So that's basically all you need to know about this bond market right through here. So lately, the bond market's just been flat as a pancake. So when you go over to these things, I'm suggesting most people just lock in their rate right now if they're closing within the next 30 days. But if you have some leeway, let's say you're a homeowner or you're looking to buy down the road, what should you do? Well, if you're a homeowner, I got some tools for you right over through here. So on our website, I actually created RateWatch 2.0, and that's a tab where you go in and you plug in your mortgage information and what rate you'd be interested in refinancing. What'll happen is I track it. I don't sell the data. I'll give you a call, I'll text you, I'll email you, and what we're going to do is go over what your new payment would be, what your cost would be, you need to know that, what your break-even point's going to be. Our average person is saving 1.3% on rates and over $500 in savings on a refinance. So check and see, if you can do that. And you can even give us a call or check out right now. But if you're looking to buy down the road, what should you do? Well, let's start looking at the markets right through here. So the bond market's pretty steady today. You look at the stock market, it's stable. We hit the Dow Jones, hit a record high yesterday. There's really nothing going on right through here. Oil's down a little bit. Bond yields are down a little bit, but here's the culprit right through here. What's the Federal Reserve going to do at the next meeting? So we're going to have tariff news. We're going to have more and more job data. We're going to have a new unemployment rate. We're going to have a whole slew of information coming in 21 days when the Federal Reserve meets. What are they going to do at the next meeting? Well, in 21 days, the probability that the Federal Reserve is going to cut rates is 83% chance they're not. Here, let me explain it to you. If you go over to this chart right through here, the probabilities, there is an 81% chance the Federal Reserve will have the federal funds rate at 3.5 to 3.75. See it right through there? Well, currently, where are we? Well, to do that, you go over to here, 3.5 to 3.75. So that means the Federal Reserve is not going to do anything at the next meeting. And it also means there's a 50% chance or over a 50% chance, even in the March meeting, they're not going to do anything. So here's my expectations. If you're looking to refinance right now, put your data in there. If you're over 7%, just stop the video and call us because you could probably save a lot of money. But if you're not closing maybe until March, April, or you're building down the road, what should you do? Let's get over to my section that I call lock or float. So if you're closing within 30 days, just lock it in. There shouldn't be anything. Well, yeah, I know that the Federal Reserve's meeting, I don't know what that's going to do. So lock in and just be safe at this time. If you're closing over 30 days, just float. Make sure you reach out to us, get pre-approved, not pre-qualified. Make sure you get pre-approved. So when you're going out to house hunt, you know what you're getting into and you know what those payments are going to be. Check out my live event I had yesterday right up through here. It was my 2026 housing market forecast. I go into details with that, and I also go over where real estate taxes and homeowners insurance play a huge role in the housing affordability in 2026. Where you find housing affordability, you're going to find house appreciation. Where you have houses that just aren't affordable, that's where you're going to see cracks in the foundation when it comes to the housing market, folks. So that's my suggestions on through here. So now, hopefully, if you're a homeowner, maybe you have some tools here to figure out if you can maybe refinance and save some money. If you're a home buyer, well, now you know where to go to get that pre-approval. Why do so many people use me? Well, here's my slogan. My slogan is this. One application, one credit pool. We're going to compare your loan to over 30 different lenders. How? Why? Well, let me tell you a little bit about me. My name is Dan Frio. I've been doing this for over 35 years. I'd love to work with you. I work at a bank that provides me a federal license, meaning I'm licensed in all 50 states as well as Puerto Rico, so I'd love to help you there. But the unique thing about our bank is they came in and said, what do you guys need? And I'm like, well, I'm the rate update, so I need the best rates in town. They're like, okay, wonder if we got set up with a whole bunch of other banks, credit unions, mortgage companies, kind of like a broker. So they did. We're set up with over 30 different lenders. So let us do the heavy working, making sure you're using the right income to qualify for that program. What program is best for you and not the bank? Well, that's why I come in and teach you each day on how to do that, and also what next going on with those and the whys behind it. So thanks for watching today, guys, folks. If you guys need some assistance when it comes to a mortgage, please visit me at therateupdate.com. If you have any questions, concerns, reach out to us. We'd love to help. Other than that, I'll be back here at the closing bell to let you know how all this mess ends for the day. Thanks for watching. God bless. I'll see you later today, folks. Bye-bye.